Hello and welcome to the channel. If you live or work in Germany or you're planning to, you've probably heard one thing over and over again. German taxes are complicated. But don't worry, in this video, I'm going to break down exactly how taxes work in Germany in a simple and practical way. We'll cover why taxes exist in the first place, the most important types of taxes you'll encounter, how income tax actually works, what gets deducted from your salary, and how tax returns can put money back in your pocket. By the end of this video, you'll have a clear overview of the whole system, without needing a degree in finance. Ready? Let's get started. So, why do we even pay taxes in Germany? It's a great question. Essentially, taxes are what fund all the public services that make the country run smoothly. We're talking about things like healthcare, education for all ages, maintaining the roads and public transport we use every day, and a strong social security net. This also includes unemployment benefits and pensions for retirement. Germany operates on what's called a social welfare model. This means that people with higher incomes generally contribute more to the system to support everyone. It's a system designed to ensure a certain standard of living and security for all residents. Now, let's dive into the main types of taxes you absolutely need to know about. First up, and the biggest one for most people, is income tax, or Einkommensteuer. If you earn money in Germany from a job, freelancing, or other sources, you'll pay this tax. The system is progressive, which is a key concept to understand. It means if you have a low income, you pay a low tax rate. As your income goes up, your tax rate gets higher. The income tax rates range from 0% for very low earners all the way up to about 45% for the highest earners. Next, there's the solidarity surcharge, or Solidaritätszuschlag. This was originally introduced to help finance the costs of German reunification back in the 90s. The good news is that today, most people no longer have to pay it. It's now mainly for high earners, who still pay a rate of 5.5% of their income tax bill. Then we have the church tax, or Kirchensteuer. This one is unique. If you are officially registered with the government as being either Catholic or Protestant, you will automatically pay this tax. It's typically 8% or 9% of your income tax, depending on which federal state you live in. The tax is collected automatically from your salary. However, if you're not religious, or if you formally leave the church through a process called Kirchenaustritt, you don't have to pay it. Finally, there's a tax everyone pays regardless of income, value-added tax, known as VAT or Mehrwertsteuer. You don't see this deducted from your salary. It's already included in the prices of almost everything you buy. The standard rate is 19%. There's also a reduced rate of 7% for essential items like most food, books, and tickets for public transport. So every time you go grocery shopping, you're contributing to the tax system. Okay, let's talk more about income tax, because this is where a lot of confusion comes from. Germany uses tax brackets, but they don't work the way many people think they do. This is super important. Only the part of your income that falls into a higher bracket is taxed at that higher rate, not your entire salary. Let me give you an example. Say you earn 50,000 euros a year. There's also a basic tax-free allowance. For 2024, this is around 11,600 euros per year. If you earn less than this amount in a year, you pay zero income tax. This ensures that people with very low incomes can keep what they earn. As your income goes above this threshold, you start paying tax only on the amount that exceeds it. This progressive slicing and the tax-free allowance make the system fairer than just applying a flat rate to everyone as total income. Now, let us talk about something you lines encounter as soon as you get a job: tax classes, or Steuerklassen. Germany has 6 of them, and their main purpose is to determine how much tax is deducted from your salary each month. The most common ones are tax class 1 for single, unmarried people without kids. Class 2 is for single parents. Classes 3 and V are a combination used by married couples where one person earns significantly more than the other. Class 4 is for married couples who earn similar amounts. And finally, Class 6 is for anyone who has a second job. Here's the key takeaway about tax classes. They only affect your monthly deductions, not the total amount of tax you owe for the year. Think of it as a prepayment system. Your final, actual tax bill is calculated when you file your tax return at the end of the year. So, choosing the right tax class combination as a married couple can give you more net income each month, but it doesn't magically reduce your overall tax burden. So what actually comes out of your salary each month? When you get your German payslip, it can be a bit of a shock to see the difference between your gross salary, the number in your contract, and your net salary, which is what hits your bank account. You'll see deductions for income tax, the solidarity surcharge if it applies to you, and church tax if you're registered. But that's not all. A big chunk also goes to Social Security contributions. These are not technically taxes, but they are mandatory. They cover four main things: health insurance, pension insurance for your retirement, unemployment insurance, and long-term care insurance. The great thing is that these costs are usually split 50-50 between you and your employer. Your employer pays their half on top of your gross salary. So, even though it feels like a lot is being taken from your pay, your employer is matching that contribution behind the scenes. This combined system of taxes and Social Security is why the gap between gross and net pay can feel so large in Germany. Finally, let's talk about tax returns, or Steuererklärung. Many people in Germany file a tax return every year, and here's the good news: for most employees, it often means getting money back from the tax office. Why? Because the monthly deductions from your salary are just an estimate. A tax return is your chance to tell the government about all your work-related expenses, which can lower your taxable income. You can deduct all sorts of things, like the costs of commuting to work, expenses for a home office, professional training courses, and even the cost of work-related equipment. You can file your tax return online through the official government portal called Elster, or you can use one of the many user-friendly tax apps or hire a tax advisor to help you out. For many employees, filing a tax return is optional, but it is highly recommended. You could be leaving hundreds or even thousands of euros on the table if you don't. So, to quickly summarize what we've covered, Germany has a progressive tax system where higher earners contribute a higher percentage. Income tax is the main tax for workers, but it's calculated in brackets, not on your whole salary. Your tax class affects your monthly pay, but not your total annual tax. A large part of your deductions are Social Security contributions, which your employer helps pay for. And finally, filing a tax return is your best friend for potentially getting a refund. Once you get a handle on these basic principles, the German tax system starts to feel much less scary and a lot more logical. I really hope this video helped you understand the basics. If you found it helpful, please give it a like and subscribe to the channel. And let me know in the comments what other topics about living in Germany you'd like me to cover next. Thanks for watching, and I'll see you in the next video.